Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and this could be the last, or it's going to be the last video update I do on YouTube for quite some time. It may be months before I do another one. Last year, I did one in July and then took a break, and I didn't do a single other one until New Year's. The reason why is because in the first quarter of 2023, I got bullish on the stock market. I put out videos and articles saying that I believed we were starting a new cyclical bull market that would probably last for 2 years. And I did this after having been bearish on the market throughout the entire year of 2022. But what happened was by June, July of 2023, I really didn't see any great buying opportunities. The market had rallied substantially the first half of that year, and it looked like it was starting to falter, and I just didn't want to put out buy recommendations. And you need to put out buy recommendations to get people excited, to want to watch your videos. No one wants to hear a video where you say, I'm not looking to do anything. Now, that's not why I'm looking to take a break again. It's for quite a different reason, and I'll get to that later on, and I'm going to show you some great opportunities. But what happened was last year, the market did falter, and I didn't do a single video. I took a vacation from July until New Year's, and then once the calendar came, I did a lot of YouTube videos, a lot of articles, and I pounded the table on buying gold and silver and looking for a commodities bull market. And that has materialized. You've seen gold break out multiple times to new all-time highs. Last week, you saw silver clear that $26 resistance point, which has held it down now for 2 years, and now it's broken and it's no longer being held down by resistance. So let's look at the markets, and I'm going to talk to you in this video about a opportunity I see outside of gold, outside of silver, outside the U.S. stock market, outside commodities that I took a position in last week that I think could be starting a brand new bull market too. And then I'll tell you why I may be going away for quite some time. But again, here's gold. And now look at that beautiful chart. The 2100 level cleared. And I was pounding the drum, buy gold, buy silver, be a silver stacker. I increased my own positions. And I even bought some physical silver. A simple way for anyone to benefit. And if you've been watching those videos, reading my posts, and position yourself, you are winning in these markets. There's no doubt about it. And last week on Sunday, in a blog post, I highlighted the BCM Industrials Metals ETF. And in my post, I revealed that I had purchased this ETF because I thought it would break out and go up and follow the action in gold, follow the action in silver. And last week, it did just that. This ETF holds futures in copper, aluminum, lead, and zinc. And those metals typically, historically, go up when gold and silver break out of stage one bases of their own. And now BCM has cleared a stage one base. And these are the type of opportunities that I look to put my money into as a great buy point for investing in something that's not just going to go up for a couple hours, a couple days, a couple weeks, but most likely a couple years. So while last year in January and February, I said, buy stocks, I actually said, buy NVIDIA. And I don't tell people to buy NVIDIA now because I don't care. I look for the great buy points. And I don't tell people to chase after things go up, for a year, and that's when everyone wants to hear the buys. I say when I see the great good shifting times, where a market shifts up. And while I thought the stock market would probably go up for 2 years, maybe it'll go up more when I was bullish in January last year, I think the opportunities in gold, silver, and ETFs like BCIM are more than just a 2-year opportunity, but something that may go up for 10 years, because I think this is the start of a secular bull market. And look at the base we're coming out of. And that's an investing concept that is so important to me. To understand that these markets move in cycles. You have a stage 2 bull market in which the 200-day, 150-day moving averages trend up and act as price support. Stage 3 is when those averages start to flatten out and you get some more volatility in the markets as the top forms. Stage 4 is the bear cycle. And when the bear cycle ends, you get the stage 1 basing phase. And that's what you saw with BCIM from May till this April, May of last year to this April. 11-month stage 1 basing phase cleared. And that means we're now beginning just the first inning of stage 2. This is where I put my money to work. I'm in early. If you've been listening to me, you're in early. And my goal is to I've got my position, okay? I don't need to buy more. In fact, if I personally keep adding on, I then have the risk of having, for me, a too big of a position and then get shaken out of it. So I'm not someone who puts all my money in one single thing. That ends up being a very difficult way to invest and trade in the long run. I am diversified. I have much bigger positions in gold and silver in mining stocks than probably anyone you may know. But as a part of my whole portfolio, it's not 100%. It's not greater than 50%. And I do actually own some individual stock sectors. Right now, I own some positions in some utility stocks, and I'm going to reveal in this video something else totally new that I bought last week that no one is talking about. But a thing about gold and silver is that it's very few people in the United States bullish on them now, even though they've been going up. In fact, 2 weeks ago, the GLD ETF saw $363 million in net redemption sales. American investors have been cashing out of the GLD ETF. Most of the buying is coming from professionals, from people that have followed the gold and silver markets for a very long time anyway, and they recognize the opportunity. Or even greater than that is outside investors outside the United States. Central banks have been accumulating for the past couple of years, and in China. As I quoted this article from Kitco, the marginal buyer of gold is no longer the United States, it's no longer Europe, it's China. Between that country's central bank and the Chinese public, much more educated, unfortunately, in these matters than the American investors, who are so captivated by the action in the Bitcoin and even NVIDIA, now that it's gone up so much tremendously. But the Chinese public is now buying 2/3 of the annual gold production in the entire world. They're the new marginal buyer. That's where the price of gold is now set. And that's just the reality. Gold is, the Americans are selling their gold, the Chinese are buying it from them, and is one way you could look at that. Eventually, the gold price will advance enough that more Americans will, in fact, finally get interested in it. Then they will buy mining stocks, and they'll buy small cap mining stocks. But all those things are going to move up before they get interested and they get bullish enough to want to chase. I'm not a chaser. I don't advocate chasing, and I don't put out videos blog posts and content to try to provoke people into chasing or to catch that chasing audience, that wants to be talked to in that way. Go on YouTube and type Bitcoin. Watch videos about Bitcoin. Watch those gurus in the crypto space talk about Bitcoin as if it's a lottery ticket and talk pure techno babble. They don't talk about charts like I do. They don't show you long-term investment buy points. They just make endless price predictions. And now they're telling people Bitcoin's going to go to 1 million. And if you buy it now, you can become a millionaire. They present their people of hype, 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 hype. And unfortunately, when at some point the Bitcoin fails to deliver on that promise, and I think it will, those people then will turn in for the gurus will shift into talking about other markets that have gone up, like they've seen the Bitcoin go up. They'll get bullish on silver 1 year in the future, and that's just what will happen. But look, as I said, I got my positions, and my motivation of putting out my content is to talk about things when these great buy points are there and we have a great time to get in. I don't care about telling people to buy stuff once I'm in it and it's already gone up quite a lot, even if I think it's going to keep going up. That's why I lost any interest in banging the drum on the US stock market after the first couple months last year. It's why I've been banging the drum, though, on gold and silver and mining stocks, but now that it's happening, now that it's broken out, and now that it's going up, and now that I'm making money, and now that other people that have gone in at the, when I have are making money too, I don't really care about talking about it anymore. I just don't. I like to talk about stuff when the shifts are happening, and the shift has happened. It's happened. So that's why I'm not likely to do any videos now for quite some time, because I don't see any great shifts like we've seen in gold and silver happening really anywhere else. When it comes to US stock market, I don't see signs of a top. I don't see signs that the bull market at the moment is ending. But at some point there will be a cycle shift there, and a top will form that we can identify. And when it does, I'll be interested. I want to put out content telling you about it, but that's the future. It's not now. But let me tell you about a market that could break out. It probably will this year into a new bull market. That's China. The Chinese stock market typically does tend to go up and down with the commodity markets. I guess when China's economy grows, there's more demand for commodities, so it helps commodities go up. That's probably why there's been a linkage there in the past couple of decades. But China's been in a bear market now since 2021. So it looks to me like it's probably bottomed out. The valuations in China have gotten low. The cyclically adjusted PE ratio for China is below 10. And in the past, over a dozen years, I've bought into a couple markets, global markets, in which the cyclically adjusted PE got below 9 and did well in those markets. Did that in Turkey. I think it was in 2021. I did that in Greece way back in 2012. Both those markets I held for about a year. I wish I was still in the Turkey trade, but I got out of it. But regardless, we have a super cheap valuation in China. And the ETFs for China, many of them have low PEs too. So I bought one of them last week. It's a small position for me. It's ASHR, holds positions in 300 of the largest stocks in China. It could, I think it's going to turn up this year. It may take months to maybe end up basing out in a stage one and then turn up, or it may just go up. And that's why I put a small position in. Now, the way I'm going to manage the position is I may add more if it goes through the high of the other of March, and if it closes below 22, I'll think I'm wrong about my analysis, and I'll just get out. But it's a small position, and it's one I may hold for 2 or 3 years if things work out for me. Let's talk about it's part of the emerging markets complex. It's the biggest emerging market. And again, this is EEM. That might be something you may want to look at. Emerging Markets ETF. But I put on here the correlation on a 200-day moving average basis of this ETF with commodities to try to show that there's been long periods of time in which emerging markets, and that includes China, trades with the commodity complex. And as we've also seen, it also tends to trade more bearish when interest rates in the United States are going up, and we've seen the top of that cycle. So that's another reason I'm interested in investing outside the United States. I do think the dollar is going to go into a bear market in the future, which will also help China, also help emerging markets. And let me give you a couple other factors about China. That's that the yuan is at artificially low level. I linked to an article in the Foreign Affairs estimating that it's 10% undervalued. Now let's talk about the risk of war with China. Global tensions between the United States and China have definitely increased over the past couple of years. Everyone knows that. And there is a risk of war over Taiwan. I don't think that if it does happen, it won't be till 2028. I would say the risk is less than 20%, perhaps 10%. If it is going to happen, though, one step China would have to take beforehand is remove its current peg of the yuan to the US dollar. The yuan's not a free floating currency. It's got it pegged to the value of the dollar. It will have to take away that peg. And since the yuan is undervalued artificially, that would cause the yuan to jump in value, which would make Chinese stocks go up for investors outside of China. And this is a move they're likely to do anyway at some point, someday, to get more control, of their own economy. They're still a developing country. So that's my thought about that. Just want to present it to you as an idea. It's not something I'm going to talk a lot about. It's not a popular idea at all, but neither is investing in gold and silver, not popular ideas. And look, it's gonna be my last video for quite some time. Two reasons. One is that, look, if you want to build an audience on YouTube, you have to do constant YouTube videos like every other day. And I've been doing a lot of YouTube videos since New Year's, but I don't want to keep saying the same thing over and over and over again. And I write my articles and my blog posts. I'm going to keep doing that. I'm going to keep doing my free weekly newsletter. You just subscribe to it, and you'll still hear from me. You'll still get my best information. So go in the description of the video and just subscribe. It's completely free. I don't ask you to. It's not an upsell. I'm not trying to sell you anything. You just subscribe. You get it for free. And doing the videos takes time. It's the less time I got to do. So I'm not going to do them for a while. I'm not going to do them again until I see a new big turning point, buy point, to take a good position for a long time. And I was banging the drum on that buy point. It's happened. The trade has happened. And if you've been listening to me and been one of the ones, as I said, buying into these markets, gold, silver, mining stocks, you're winning. You're doing great. If you bought BCIM last week, you're doing great, but I'm not telling people to chase. I'm not going to do it. I'm not a Bitcoin guru. I'm not that kind of person. So I'm going away until I see another opportunity, which I feel compelled to bang the drum. I see a window opening to take the position in something else. then I'll bang the drum. And it could be a short trade in the US stock market. I don't know what it'll be. I just told you about China, but I'm not going to bang the drum on China. I'm not going to become a promoter of China on YouTube or anywhere else. And it's just a small trade for me anyway. So anyway, again, subscribe to my free email list to keep getting my stuff. And I'll be going away for a while off YouTube. Yeah, so have a good spring. This is vacation time too. I'm travel, man. I got my positions. I'm holding my positions. I'm not selling my positions. I'm not adding on to my positions. I'm just gonna ride it, man. I got in. I'm riding this market up. Ride these trades up. Ride it. Ride the gold and silver trend. Have fun. That's what I'm gonna do. Take a vacation. Have fun. And I'll be talking with you later. That's what these markets are about getting in, making some money, and riding it. And if you don't need to gamble to do that. You don't need to take giant risks. You don't need to go on margin. You don't need to buy call options. You don't need to buy crazy volatile things to try to gamble. You don't need to get in Bitcoin or crypto or silly virtual currencies. You're getting things stable. You're getting things that don't have huge volatility, but are trending up, not just for a few weeks, not just for a few hours, but are positioned to do it for a long time. And that's what the market should be about, helping you to do other things. So all that said, have a good spring, and I'll be talking with you later.